I would say, we still see in our baseline view plenty of upside, just given, sort of where we are. 5250 would be a little bit higher for this year, but in the event that we do not have a recession, plenty of upside to year end. And so we would get to 5250, sometime next year.
Sometime next year. In the event we do slide into a recession, you write, imminently, we see the market sell-off going well beyond average. Given initial overvaluation, do I have this right? 35 to 40% of the historical range, or would take you back to 3K?
That's exactly right, Carl. If you think about, typical sell-offs during recessions, what we've basically seen is that the extent of the sell-off in a recession depends, first and foremost, of course, on how severe the recession is going to be. So if you think about, a median decline basically in earnings, which would be about 20-21%, but what also drives the extent of the sell-off during a recession is really the extent of overvaluation. And you combine the two things together, and you're talking about, well above average sell-off. And so if you think about, where we were at the recent low, basically down about 18%. 18% compares with sort of, an average or median decline during a recession of 24%. So I'd say, we're 3/4 of the way there, but it looks pretty binary, beyond that. And I don't think matters get settled, basically, as to whether we're going to go into a recession or not. I think it takes a couple of months. But yes, our baseline view is clearly no recession. And I would say, there's not any signs yet. I mean, there's a number of reasons why we could get there, but we're really not there yet.
We're not there yet. The curve did invert, which initially was what really spooked the market about the potential for a recession, at least in the next 12 to 18 months at that point in time. Do you see no recession ever, or just no imminent recession? Just wanted to clarify that.
No imminent recession. Our, baseline view is that we would go into a recession late in 2023. It's just way too early right now.
Makes sense. I'm curious what you make of this week's market action, because we've seen a nice reversal for the broader indexes. Of course, it's short-lived. It's only a week. We don't know what to make of it from here. But do you think this is the market kind of catching its breath a little bit, kind of seasonality to it, potentially some positive green shoots in the data and in earnings? Or do you think this is kind of the indications that we have already reached a bottom and could go higher from here?
So I would say, this week, coming into this week, we expected the week to be basically supportive of the market. Basically, on the technical front, we basically options expiration. That's generally tended to be positive. We have basically month-end, because of the long weekend coming up, month-end rebalancing into equities happening a little bit earlier, so that's supportive. On the fundamental side, still a bit early, but what I would say is, the read from retail earnings appears to be the consumer is not dead or dying, is just sort of rotating. We're trying to figure out still exactly how the consumer is rotating, but it seems to be a rotation story rather than a completely negative story. So, we've had both technical and fundamentals, support basically the market this week. Not entirely. The tech earnings concerns are still basically there. But I would argue, this is more like a reprieve than, a definitive bottom or any such thing. I mean, like I said, coming into this week, we expected, the market to be pretty well supported.